We're very lucky enough for today to welcome uh, accountant Howard Lee. He is a senior CPA. He's very experienced in terms of tax reporting. And we're going to talk a little about fundamental in tax filing. So what are the W-2s, I-199s, and what are the forms and state and federal taxes? Also, we're going to talk about, if I'm just started in my should I fill by myself or should I go with an attorney? And also we're gonna go through some Q&As. Hopefully, Accountant Lee is gonna share some example with us. Hopefully that will be helpful as well. And at the later half, we're gonna do a Q&A with everyone. So that please feel free to shoot your questions right now in the Q&A session. We'll collect all of the questions and hopefully we'll answer that for you. So just a little bit of context about our company. We are located in Los Angeles. We are a professional consulting education agency. So we work with Day One CPT universities. We also help you do F1 reinstatement or emergency transfer, as well as change status applications. So our mission is always to make students' American dream come true by helping you with our exceptional services. And we are certified by AIRC as one of the most respectful education agencies in the US. So after this session, if you have any questions that you wanted to ask Mr. Lee or ask us, please feel free to scan the QR code for WhatsApp or for WeChat. We can connect you with the accountant or with our consultant to help you solve your questions. And we're also on Google reviews, so feel free to check us out on Google at goelite.inc. We currently have, I would say, around 290 good reviews, so feel free to check us out. And this is our social media. So feel free to check us out on LinkedIn, YouTube, and Facebook, any social media channel. So without further ado, I will let accountant Mr. Lee introduce himself, and also I will start sharing the presentation slides. All right. Okay.
Oh, thank you very much for the introduction. All right. Yeah, today my the subject will be, let me get this slide so it doesn't block.
Are you able to see the PowerPoint?
Yes, I'm able to see the PowerPoint. Okay. So today's subject will be complete tax guide for U.S. employment starters, and I'm Howard Lee CPA, and this is a little bio. First president of Chinese American CPA Association. It's organized in 2011. We have about 400 CPA members. We regularly meet on a monthly basis to talk about new tax laws and how it applies to our clients. A special tax consultant for Phoenix Television, U.S. satellite TV station. So Phoenix TV is a lot of people, or if you're from China, you know there's a Phoenix TV station. They have about, I don't know, 10 different channels. And even in North America, they have a Phoenix channel. And they usually, when they have come with new laws, and they usually ask me to explain the new laws to the public. And as you know, the U.S. tax law is a little complicated. And adding to that, it changes every year. If this year Trump replaces Biden, then there's going to be a major change in the tax law as well. I'm also a senior consultant for HR Block in the U.S. HR Block is the largest tax filing company in the U.S. I deal with the international tax consulting area, and certified senior consultant for QuickBooks. 80% of the U.S. small company uses QuickBooks. I'm a certified consultant from their company as well. Authorized final review of TurboTax. A lot of people file their own tax return with TurboTax. At the end of TurboTax, they'll ask you if you want someone to review your return for a fee, and that usually goes to the company. And I'm one of the final reviewers for the tax return. So we have people review all the return that was prepared by individuals, and then we give them clues and see what their weaknesses are and how likely they get audited, and then we will give them our advice, and then they can file their return with a little bit of professional advice. Okay, let's go to the next one. First question is, a lot of people ask me, should I file tax on my own? And if you're a US resident and you don't have any foreign accounts, foreign trust, foreign company, foreign partnership, foreign gift, anything foreign, uh, then go ahead and use TurboTax. If you do have something foreign, a lot of my clients, about 80% of my clients that come from China, they have a lot of foreign tax issues, but they don't have those modules in TurboTax. They don't deal with foreign tax credit, foreign earned income exclusion. They don't have any of that. So if you're a person that's not originally from the U.S., you have some foreign asset in other country outside of the U.S. For example, a lot of my clients they use their kids' name to buy house in China. The kids might not even know about it until they ask. And also, some client of mine, they use kids' name to buy and sell stocks in China, and they didn't even know about it. And that's considered a financial asset and need to be reported. And these reporting could not be done with TurboTax. You should definitely seek professional help. And if you do want to use the software, you can consider these other software. They have foreign foreign forms modules like Lacerte, TaxAct, or for professionals, TaxSlayer Pro, CCH Pro System, ATX, Intuit Pro Series Professional. These software are a little high, but they do have foreign. If you want to file on your own, especially if you're an accounting major, it's good to learn something on your own. And these are the software that you could use. TurboTax is just too simple. Usually, you just have W-2 and 1099. Use TurboTax is good enough. But if you have any foreign stuff, should not. TurboTax doesn't have those modules. Okay, let's go to the next page, please. Okay, tax benefit for F1 student, and this is based on the tax treaty between U.S. and China, People's Republic of China, and it says a student or business apprentice or trainee who is a resident of People's Republic of China on their arrival in U.S. and who is presented in U.S. solely to obtain training, education, or special technical experience in exam is exempt from U.S. income tax on the following amounts. So if you're an F1 student for the first 5 years, you're not going to be counted the days. So you can use this rule. Payment received from abroad or maintenance, education, study, research, or training. When they say from abroad, that means if you get some payments from China, because you're non-resident yet, you don't have to report any foreign assets or foreign income, only the U.S. income only. So you have foreign payments you received, you don't have to report that, or you report that it's not taxable. Grants or awards from government, scientific, educational, or other tax-exempt organization. So these are some of the grants that might not be taxed to you, but you need to get a receipt from them. So that way you can see their tax ID. If they don't have a tax ID, for example, they're a tax-exempt organization, they give you this grant or award. They don't have a tax ID. You still need to report it, and it's probably taxable. If they have a tax ID and then showing that they're a tax-exempt status, you may not have to pay tax on it. Income from personal service performed in the U.S. of up to $5,000 for each year. So if you do something on the side because when you're F1, you don't really have a green card. You're usually not allowed to work. You don't have a work permit. But if you perform some personal service up to $5,000, that income could be excluded from the foreign income. An individual entitled to this exemption only for the time reasonably necessary to complete the education or training. So they need to file a tax return and then claim this treaty and then get the exclusion. Okay, let's go to the next page. And this is a tax return or tax form you're supposed to use if you're F1 status for the first 5 years. That means you're a non-resident. 1040 NR is non-resident. Okay, it's only for foreign person. And these are the That's the form you use. A lot of people didn't know they use TurboTax. A TurboTax automatically generate 1040 SR, that means senior, and 1040 easy. It doesn't have the 1040 NR module. So that way, if you use TurboTax, make sure you already have green card or you have a U.S. tax resident status. Next page, please. Okay. Ooh, not that fast. Go up below, more up.
Oops, sorry. I think
you're going down. Let's
I'm
see.
so
Let's
sorry.
go back.
Let's resume from here.
Right.
Okay. Okay.
Okay. And okay, from here we go to the next page. Okay, and here's the second page of your 1040 NR. And also on the bottom where you sign, if you have a CPA prepare your tax return, on the bottom of the sign here, you actually have the pay prepare information on it. And if IRS look at your return, if it says self-prepare, your chance of getting audited is higher than if you prepare by a professional. And of course, the professional, the company's name, address, and their PITA number should be listed so they know they can find who filed your return. So it's important. If you file yourself, if you occur penalty, you have to take care of it yourself, or you can get a taxable resident to help you take care of it. Okay, let's go to the next page. And this is Schedule OI for 1040 NR. See, it asks you a lot of questions of what country you're a citizen or national during the tax year. And also in the middle, it asks you the enter date and departure date. So they count the 183-day rule on this page. And it shows on H, 2001, 2022, 2023, how many days you were in US. So they add those up to see if you fulfill the 183 days. If you're the 6 years and they start counting days, and then they will add up those days. And if you stay in the US more than 183 days, you become a taxable resident. And then your tax responsibility change from just the US income that you need to report on the 1040 NR, become worldwide income and worldwide financial asset need to be reported when you are a taxable resident. And also on the bottom, if you have it lists the country and the tax treaty article. For example, the one that we just saw, the first 5,000, you don't need to pay tax on it. This is where you fill in People's Republic of China and given the tax treaty article number and what month you're claiming as well. So let's go to the next page, please. Okay, and this is the tax treaty. If you're from China, there's a China-US tax treaty that you can get from the irs.gov website, and this is the link. You can click on that and go to the tax treaty directly. And if you have exemption from withholding, you may have to file 8233 exemption from withholding on compensation for independent personal services of non-resident alien individuals. So if you have a personal service that you receive money, but you don't have a working permit yet, you might have to file the 8233. So let's go to the next page, please. Okay, this is actually the tax treaty itself. If you click on that link, it will take you to here. And you can see this was signed a long time ago. It was started in 84, and then they enter into when it become effective is 1987. So they were signed a long time ago. And then it lists all the articles, and you can take a look at that. And you can for the student, you can take a look at Article 20, because that's where I get that article from. When it says the first 5,000, you do not need to pay tax. It's Article 20 on the tax treaties. Okay, let's go to the next page. 8233 exempt from withholding on compensation for independent and certain personal service of NR, non-resident alien individual. So this form shows who should file, And then and also on the bottom, if you have these items, you don't use the 8233 form. So on the top, it says who's supposed to use it, and the bottom, who's not supposed to use it. So take a look at that if you have personal service in US while you're a student. Okay, let's take a look at next page. Independent contractor versus employee, which is the 1099 versus W-2. Whether a worker is an independent contractor or an employee depends on the relationship between the worker and the business. Generally, there are three categories to examine: behavioral control, financial control, and relationship of parties. Behavioral, does the company control or have the right to control what the worker does and how the worker does the job? We see a lot of audits for this area because a lot of people, they don't want to withhold tax, or the employer doesn't want to withhold tax for the employee. They just give them the 1099. But if they have these controls, they basically, the 1099 would be invalid. They will be forced to do a W-2 for the employee and forced to pay the employer's portion of the tax and also employees' portion of the tax. If they have, these three control: financial control, does the business direct or control the financial and business aspect of the worker's job? Are the business aspect of the worker's job controlled by the payer? Things like how the workers pay, are expenses reimbursed, who provide tools, supplies, etc. I usually kind of think about it, if employee for accounting office, which we're in, we just come to work and then do the tax return according to what the boss tells us to do, or according to the IRS code, and then the boss actually pay us hourly. They tell us exactly what need to be done, and that would be an employee. If it's just an electrician that we hire just to fix the computers, we don't control any type of tool they use, and when we only tell them, okay, when we have a problem, you come and then you get the computer fixed. And those are 1099 because they're a subcontractor, independent contractor. And relationship of the party are their written contract or employee type benefit, their pension plan, insurance, vacation pay. For the independent contractor, usually we don't offer those, but for employee, we would offer the pension plan, insurance, vacation pay, etc. Where the relationship continue as the work perform a key aspect of the business. So these are what the question that IRS will ask when they try to determine if it's an employee or an independent contractor. Okay, next page, please. Now we go to the Q&As. Last time when we had a seminar here, a lot of people asked different questions, and we kind of gather those questions and then we give them answer. What's the difference between resident alien and a non-resident alien for tax purpose? For tax purpose, an alien is an individual who is not a U.S. citizen. Aliens are classified as resident alien and non-resident aliens. Resident alien are taxed on their worldwide income, the same as U.S. citizen. Non-resident alien are taxed only on their U.S. source income and certain foreign source income that is effectively connected with U.S. trade or business. So a lot of people, foreigners, they come to U.S., they might purchase a U.S. Real estate property, and then they collect rents on it, and that's considered U.S. Source income. So the rent income need to be reported. So any type of, and they deposit money in a U.S. bank, that also need to be reported, but might not be taxed. So on the tax return, you can report that and claim on the exemption on it. Okay, let's go to the next one. I'm a resident alien with no dependent. I'm working temporarily for a U.S. company. What return do I file? You must file a 1040 NR if you're engaged in the trade or business in U.S. or have any other U.S. source income on which tax was not fully paid by the amount withheld. So if they're a non-resident alien, they temporarily working for U.S. Company, one thing is we have to ask them, do they have a right to work? They might just have the working permit. They don't have a green card. They need to file the 1040 NR. And also, if they stay over 183 days and they're not a student, so they need to file. If they did not stay more than 183 days, they file the 1040 NR. If they go above that, they have to file the 1040. Okay, let's go to the next page. I come to the US on June 30th of last year. I have an H-1B visa. What's my tax status? Resident alien or non-resident alien? What tax return do I file? You're a dual status alien last year because you come on June 30th. As a general, because you were in the US for 183 days or more, which is like 6 months, more than half a year. You have meet the substantial presence test and you are taxed as a resident. However, for the part of the year that you were not present in the US, you are a non-resident. File 1040 or 1040 SR. SR is for seniors. Enter dual status return across the top. Attach a statement showing your US source income for part of the year that you were non-resident. You may use the form 1040 NR as a statement. Enter dual status statement across the top. So if you actually came to the US on June 30th, and then you stay for the rest of the year because you stay more than 183 days. That means the first year you file two returns, dual status. The first return will be January 1st through June 29th will be a non-resident tax return, and June 30 to December 31st will be a resident tax return or regular 1040, and that's where you put on the dual status return and put a 1040 NR as the dual status statement on the bottom put that a statement on the top and put it on the bottom of the return. Okay, let's take a look at the next page. When is my Form 1040 NR due? If you're an employee and you receive wages up to US income tax withholding, you must generally file by 15th day of the 4th month, which is April, after your tax year ends. If you file for the 2023 calendar year, your return is due April 15, 2024. When you're a student in school, although you don't have a work permit, you're still allowed to work in the school only. So if you get a job in a school library, that means you get a W-2, and then you file 1040 NR. Just show that you're still a non-resident status. You're not a regular resident yet, but that way you can get a lot of your withholding tax back because you're not subject to the Social Security benefit yet, so you can get those tax back. If you're not an employee who received wages up to U.S. income tax withholding, you must file by 15 days of the 6th month after your tax year end. For the 2023 calendar year, file your return by June 17, 2024. So if you're outside of U.S., you can file. You have 2 months extension to June 15th. But we usually don't tell people about the second part because people would just keep delaying. We want them to get it filed by April if possible, so they don't delay and get unnecessary penalties. Okay, let's go to the next one.
Quick questions. So
Yes.
none of the students they are working under CPT, which means they are a F1 students, but they are also an employee of a certain company. In that case, are they category 1 or 2?
They're 1 because they're in the US. They're working in the US.
The deadline for them will still be April 15th, right?
Yes, that's correct.
Okay. Thank you for your clarification.
Yeah, some people they actually work in a US company in China, then they have the June 15th day extension, 2 months extension because they're outside of China, but they're still receive wages subject to US income tax withholding.
Okay, sounds good. Thank you.
Okay, let's go to the next one, please. I'm a non-resident alien, cannot file a joint return with my spouse. Generally, you cannot file a married filing joint if either spouse was a non-resident alien at any time during the tax year. However, non-resident alien married to a U.S. citizen or resident can choose to be treated as U.S. resident and file joint returns. So if one of the person is NR, they generally cannot file married file joint return, even they're married. But if one of the spouse is a U.S. citizen, then the other one could be treated as U.S. resident and file joint return. But before they make such a decision, they make sure they did U.S. tax planning, Chinese asset U.S. tax planning, because that means all their China assets need to be reported when they choose to be reported as a U.S. resident. Okay, let's go to the next one, please. I have an H-1 visa and my spouse has an F-1 visa. We both live in the U.S. all of last year and had income. What kind of form should we file? Do we file separate return or joint return? Assuming both of you had these visa for all of last year and you are a resident alien and your spouse is a non-resident alien, if they have not been in the U.S. as a student for more than 5 years. So the first 5 years, they don't count the days. The 6th year, they start counting days. You and your spouse can file joint tax return on 1040. So once both become taxable resident, you and your spouse can use the 1040. If your spouse makes a choice to be treated as a resident for the entire year, so even if your spouse is non-resident, they can make a choice to be treated as a resident. But once you're treated as a resident, you'll continually be identified as a taxable resident until you abandon the taxable resident status. If your spouse does not make this choice, you must file a separate return on 1040 or 1040 SR. Your spouse must file 1040 NR. So one H-1B, usually if they stay in 183 days, they are U.S. resident, file 1040. Spouse is the F-1 visa, the first 5 years, they can file the 1040 NR. Okay. I'm a non-resident alien invested money in U.S. stock market through a U.S. brokerage company. Are the dividends and capital gains taxable? If yes, how are they taxed? The following rule apply if dividends and capital gains are not effectively connected with a U.S. trade or business. Capital gains are generally not taxable if you're in the U.S. for less than 183 days during the year. Dividends are generally taxed at 30% or a lower treaty rate. In China, between the U.S.-China treaty, they usually tax the dividend at 10%, which is a lower treaty rate. The brokerage company or the payer of a dividend should withhold this tax as stored. If tax is not withheld at the correct rate, you must file 1040 NR to receive a refund or pay an additional tax due. So usually, if they're being withheld for 30%, they can file 1040 NR to get that 20% back. If the capital gains and dividends are effective connected with U.S. trade or business, they are taxed according to the same rule and at the same rate that apply to U.S. citizen and resident. So that's the rule. So U.S. and China, they usually have a lower tax treaty rate of 10%. But if the country that did not sign a tax treaty, for example, Taiwan, they did not sign, so they're taxed at 30%. Okay, let's go to the next one.
Okay, so before we do that, I do want to ask Mr. Lee that because I see we also have some of the Q&As, I wanted to get to some of the bullet points first, and then maybe we can kind of circle back to ask people's questions live, so that will benefit our viewers a little bit better. Is that
Sure.
okay? Okay.
Not a problem. Okay, that's good. Okay, foreign students, scholar, teacher, researcher, and exchange visitors. Who must file? Alien temporary present in the U.S. as student, training, scholar, teacher, researcher, exchange visitor, or cultural exchange visitor are subject to the special rule with respect to the taxation of their income. There's no minimum dollar amount of income that trigger a filing requirement for the non-resident alien, including a foreign student or foreign scholar. Filing is required by non-resident alien and students and scholars who have a taxable scholarship or fellowship grant as described in Chapter 1 of Publication 970, Tax Benefit for Education. Income partially or totally exempt from tax under the term of tax treaty and or any other income that is taxable under the Internal Revenue Code. So basically what they're saying, there's no minimum dollar. So if you make $1 in US and you're a non-resident, you're supposed to report it. It might not be taxable, but you have to report it and get the exemption. So that's what they're saying. If you know they're exempt, you still have to report it and get the exemption. List your treaty code so that way you can get exemption. Let's go to
One question is, for example, like if I don't have the documentations of how much income did I make, how do I report that?
What type of income?
Like for example, if somebody working in the school, but they lost like the school pay stub because it was like years ago that they didn't report it. Like how did they some of the lost documentations? Do you just put in the numbers or do you have to actually work with where you get the income and provide the documentations of how much money that is?
It's better to get the source document. If you work in the school, they usually give you a W-2. If it's a couple of years ago, you can request it from the school to give you the old W-2. If they just cannot generate for some reason, you have to use your best memory how much. If you report it differently from the actual W-2 figures, there's a inaccuracy penalty that could take place.
Okay, sounds good. And let's go to the next slide.
Okay, determine the residency status. Introduction to residency as under U.S. tax law. A green card. Once you're a green card, you're a taxable resident already. A substantial presence test. That means the 183 days rule. For example, a person that coming with B1, B2 visa, if they come to the U.S. for more than 183 days, then they become a taxable resident automatically. And they count the 183 days for the last 3 years. For the current year, each day is counted as one. For the last year, each day count as 1/3. For example, last year they spent 3 months. So only 1 month of days, about 30 days, is counted as in the substantial present test. And the years prior to the last year, that's 1/6. So if they stay there for 6 months, only 1 month of day is counted. So they added these 3 years together to see if you go over 183 days. And for student, the first 5 years it does not count the days. So the 6th year, if you're still in school and you still stay in U.S. Around July 1st, you become a taxable resident because you stay more than 183 days. Residents starting and ending dates. That's actually I listed a couple examples at the end of the thing. It shows you how to exactly count the days for different situations. For example, your F1 student or your H1B student, or you have a spouse that's H1B, and vice versa. So I have those at the end. Dual status aliens. Oops.
Sorry.
Let's go back.
Sorry, my mistake.
No problem. Dual status aliens, that means the first year you become a taxable resident. For example, you become taxable resident today, March 7th. That means you probably likely will file dual status return. For January 1st through March 6th is non-resident, and March 7th through December 31st is a taxable resident. And only the taxable resident portion, the worldwide income, need to be pay tax in U.S. So if people they actually come to U.S. for like Christmas, they only stay in U.S. for like 6 days, and they are subject to be taxed for that year. But if they use a dual status tax return, only the last couple of days is subject to worldwide income, because from January 1st to December 24th is not his tax as non-resident. Only the U.S. income is counted in those days. The closer connection exception to the substantial presence test for foreign student. These are special things. If they go over the 183 days and they have certain exception, for example, they're in hospital, they cannot go to China, medical reasons or certain special event, you might get exception for not become a taxable resident that year, but you have to file a form according to it. Alien residency examples. If you go to the IRS website and type in alien residency example, it tells you exactly how to calculate the days. And we have a couple examples at the end of the seminar. Okay, let's go to the next one. Taxpayer identification number for foreign student scholars. This is a lot of mistake that made by a lot of foreign students. They come to U.S. Because they apply for a social security number directly. They didn't even know that they have a choice to get a TIN. They get a social security number. So when they work in school, they get a lot of tax withheld because they're taxed as a normal taxable resident, and then they get their Social Security benefits and Medicare. All those taxes are withheld because they apply for the SSN. If they're a foreign student, they should apply for TIN, so that way they don't get these extra tax withheld. Filing Form 10 W2 and 1042S, foreign persons U.S. source income subject to withholding. So sometimes if they have a U.S. source income, someplace they just withhold 30% or more on a foreigner, and they'll give you a 1042S at the end of the year, and you need to take that to your accountant and say, okay, I don't need to be taxed at 30%. I have a tax treaty that get a lower amount. You can get those tax back. Obtaining ITI from abroad. ITI you can get a couple places. You can get it from the IRS directly, and we also help people apply for ITI if they need. So either way is fine. But ITI is important. If you're just foreigner, you don't need to pay extra tax until you become a taxable resident. Then you can apply for SSN. That way you get extra tax withheld, but that would count as a benefit for you in the future when you retire. You get the Social Security benefits and Medicare benefits. Okay, let's
Mr.
go
Lee,
there.
for the timing's sake, I think we do have lots of questions already asked from our viewers. Do you mind if we go into the live Q&A session a little bit earlier? So if we finish that, we can always come back to the presentation. Is that okay?
Sure, I don't mind. Yeah, that would be fine.
Yeah. So just let me pull out the Q&A section and we can take a look at what people are asking.
Mhm.
Let me just zoom. Okay, sounds good. All right. So the first question, basically, I will read all the questions because this is kind of small. I don't know if you can read it. I will read all the questions, so you can just take the answers from there.
Okay.
And if our students, if the viewers, you do have, a follow-up questions after that, or your case is pretty unique and individualized, we do recommend you to scan the QR code so we can connect you with Mr. Lee. Or if you have any questions regarding CPT or Day 1 CPT, we're happy to help. All right, let's go from the number one questions. So F1 status, the person has F1 status from January 1st to September 30th, 2023, and using CPT. Now is changing to H1B status from last year. Changed to H1B starting from October 1st. So in case, how is the person are supposed to file for the taxes last year?
If that's first, I need to know which year did he start at the F1 status? Because the first 5 years, the question is from January 1st. I don't know from which year. If it's just that's the first year they got F1. Actually, once they change to H1B status on October 1st, they will likely to become a U.S. resident next year because H1B on October 1st will start a counting date process. And from October 1st to the end of the year, for sure, they will not going to reach 183 days. For 2023, they can use the 1040 NR to file and get the 5,000 tax-free or personal service exemption on that one.
So what if this student is already a resident alien, even if he was or she was in F1? In that case, would it be any different?
Yes, if they're already over 5 years, they become a taxable resident, they will just file the 1040 regular, and they don't have the 5,000 exemption anymore. But they have a lot of tax saving tools on the regular tax resident return that they could use to because just the standard deduction will eliminate $5,000 that they make.
Sounds good. Thank you for that. And number two, hi, Mr. Lee. I work at a company in New York, and I live in a leased apartment in New Jersey, and I also own a house in another, say, MA. Which state should I prepare the income tax return? Will I be double taxed?
Own a house and then I work at a company and live. Okay, usually is where you live. You in this case, he or she might have to file a multi-state tax return. Where you live, you become a taxable resident for that state. And if you have an income from another state, since she says she owned a house in MA, I assume they collect rent on the MA house. I don't know if Massachusetts or MA.
Is Massachusetts, yes.
Okay, MA house that they will have a separate MA state tax return. So they will have one federal return and might have to have a New Jersey return and a state MA return and also New York City return.
It shows that my screen sharing is paused. Are you seeing my screen correctly?
Yeah,
let-
I no, it looks fine on my side.
Okay, sounds good. Then we will continue.
Okay.
Okay, thank you
And
for
they
your.
will not be double taxed for the state tax because on the state, you'll get state credits. If you pay credit tax on MA, then you don't need to be double taxed for the MA income in New Jersey or NYC.
Okay, sounds good. Let me just quickly double check on if my screen is sharing correctly. In case everybody do see that, let me just switch that real quick. So, okay, let's go to the number 3 questions. So how long can you use the US-China tax treaty after graduation and working using OPT? So it's still in F1 status, but he's no longer in school.
If they're F1, so just 5 years. The first 5 years, the first year they become F1, and the following 5 years you can use the tax treaty.
Sounds good. And let's moving on to the next question. How is employers' tuition reimbursement taxed for resident aliens?
Hold on, how come I don't see that?
So
Okay. Okay. I am open up the. Okay, now I can see it. How's employers' tuition reimbursement tax for RA? Is that what does that stand for?
resident aliens?
Oh, okay. Employer, if they pay tuition for the employees, it usually counted as income, and they need to file that. And then if they have treaties for that, they can get a lower tax amount.
Sounds good. And let's moving on to the next question. If I have a short-term gain of $1,000 of stock investment this year and long-term lost, more loss than gain from the stock market last year.
Right.
So can I still use the capital loss for tax deduction of my gains so I don't need to pay taxes for my gains?
Yeah, first the short term and the long term will be netted out. So you will use the 10K against the 1K, so you have 9K of capital loss left will be accumulated next year. If you continue to have gain, you can use that carryover loss to apply against your capital gains.
Okay. Next question is actually very interesting. So this person actually got married and took the marriage lesson in December last year, 2023, but had a wedding ceremony in 2024. Should he or she file status single or married for the 2023 taxes? And does he or she need to share with the state that, about the marriage status?
Oh, it actually the marriage license or where you register is determined if you're married or not. They don't care when you have this wedding ceremony because that's not a legal issue. But where they apply for their marriage license. So if they got it in December, even they got it for December 31st, 2023, they're still considered married for the entire year. So it doesn't matter when they have the wedding ceremony or if they have the wedding ceremony at all.
Okay, very clear. Thank you. Next question. I forgot to consider 1099 SA tax form from HSA. I don't know what that is. For my tax preparation, does that mean I owe money to IRS or IRS returned less money to me?
If you you're supposed to put a 1099 essay on your tax report. Um, it would if you have that, it probably because it's like income that you did not report, so you're likely to owe a little bit more money. It depends on how much is money you have it on 1099 SA.
Absolutely. So for these kind of cases in general, for example, if somebody made a mistake last year, like how long of a time or a grace period should he get? Like should he do another tax like explaining last year like right away or like when what how would the timeline be like?
After if they filed it already and they received the 1099 SA later, they can amend their return after October 15th of this year, and they have within 3 years to amend the return. Or they can wait for sometimes IRS, because the 1099 SA, it gives given to the taxpayer and also the IRS. Sometimes IRS will give them a letter showing, oh, you forgot to put this in, and then it'll give you additional tax and penalties, and then you can just pay that off. So either way is fine. You can file amendment yourself, or you can wait for an IRS letter. But when the IRS letter comes, it usually comes with a penalty.
Sounds good. And so next question, I don't know if this is the same person, but it is very common that I work in New York, but live in Jersey City, New Jersey, another state. I can avoid paying New York taxes. So how should I file my taxes in this situation? And what do I need to do for the New Jersey side?
Actually, each state and each city, they have their own tax rules. You have to read it, and then make sure that you become which resident you are considered. Some people they consider where you live, and sometimes they consider where you work. Sometimes they consider where your kids go to school. So it all depends on which city and which state the state tax laws or the city tax laws, and then you have to read the code to find out what you need to do. If you see, this is like mainly U.S. tax return. If you don't have any foreign accounts or foreign asset, you could use the TurboTax, and it would actually tell you which state you belong. It has a list of questions for you to answer. It will help you determine which city and which state that you will be taxed on.
Thanks, very helpful tips. Next question, how should I file my tax when I changed from F1 to H1B last year? Should those statuses make any difference when it comes to tax?
Maybe F1, make sure you're below the 5 years, so that way, not you always file 1040 NR. But once you become the 6 year in F1, you still have to file 1040. And if you're within 5 years F1 and the first year you become H1B, it depends on numbers days you have the H1B status for that year. For that example, the H1B student had, I think last one it was October 1st. So
Yes.
they will not pass the 183 days. So that year you can still file the 1040 NR. But the very next year, if he continues to stay in U.S., he probably have to file the 1040.
Absolutely. Next question is more personalized. So I have an investment bank account in China, but I have been in the United States for more than 5 years, and I have been filing taxes as resident alien in the past few years. In case, should I file the dividend and income of the Chinese income as well?
Yes, you have to file, because once you're a resident alien, the worldwide income and worldwide financial asset need to report it. So not only the income you need to report, also that foreign financial account that you kept the dividend in need to be reported as well. If you don't report on the 8939 form, the penalty is significant. And I could give you all the penalty that I have. That way, if you scan my QR code at the end, you can get that. I can get that for you.
Absolutely. And we recommend you to scan the QR code on WeChat or WhatsApp right away. We will be able to connect you with Mr. Lee for sure. And then moving on to the next question. This is also a very good question. I pay FICA tax as resident alien for many years, but I don't have a green card. So when I leave the US, can I get refund on that FICA tax I paid?
Only if you don't plan to become a tax resident, or you plan to give up, but that's when they have the social security number. They will withhold FICA taxes where you don't need if you don't eventually will leave the U.S. And you can get that refund back for the current year and the last 2 years. So if you have more than 3 years, you probably cannot get that money back, because you're only allowed to amend your return for 3 years, and you can get the refund for 3 years. If it's more than that, you cannot get the refund.
Absolutely. And also another one regarding the locations where the people live. If I live in New Jersey, in a period of time, and then in California for another period of time. How do I do the tax preparation?
Okay, the federal tax return will be the same. The state, it will be a part year tax return for both of them. So part year will be January to, you actually specify January what day to April what day in New Jersey, and California from May what day to December what day. So they actually do a part year state return on both states.
Absolutely. Thank you for the information. Next one, my former employer underpaid my Social Security tax and refused to fix it. Is there anything I can do?
Underpay your social, okay. You can report to the IRS if you want, if you're sure what's going on, because they're not supposed to do that. And make sure you give them when you're first employed, they're asked you to file give them the W-4 form showing if you're married, how many kids you have. It determines how much Social Security tax they should withhold. If they're not withholding according to your W-4 form, then you can report to the IRS, and the IRS will deal with them.
Absolutely. Thank you. Next question. I came to the US in August 2018 as a PhD student. Does that year of 2018 and also that month was August, does that year count as 1 year towards the 5 years of non-resident tax purposes? Also, I graduated in 2023 and is currently using OPT. So which form should I use to file for this year 2023's tax?
Okay, I assume he came in as a F1 visa. So 2018, 19, 20, 21, 22. Up to 22, he should use the 1040 NR form. And in 23, currently on OPT, is if he stayed more than half year in 2023, and then he will use the 1040 form.
Does it matter when was the month that he entered? For example, you said August 15th. If it's not like 183 days, does it matter for the first year?
Actually, when they count the 5 years, it uses calendar year. So it doesn't matter which day you come in. If you come in August 15th or December 31st, 2018, that also counts 1 year. It's just only the calendar year. So it doesn't matter which day you come in. It doesn't go on a physical year.
Okay, good to know. Thank you for that. Next question. I come to the US in September. I think this is very similar, and I think the answer will be the same because you guys, if you come in as an F1 as well, you should file for 2023 as a resident alien, right?
That's correct. 1040, yes.
For our next question, my spouse and I stay in different states. Can we file married jointly for both federal and taxes, state taxes?
Yeah, if you're married, you have the option to marry file joint or marry file separate. If you file jointly, you probably have one federal return but two state return if both of them have income. If one of them doesn't have income, most likely you're going to have one federal and one state tax return.
Absolutely. And moving on to the next question. So how much do you charge for a F1 tax filing with work income and investment income?
We charge by form, so it depends on how many form that you have, how many W-2 or 1099 you have. We charge by that. So everybody's different. If you only have F1 student, you don't have any foreign asset, foreign account, then it's very inexpensive. It's probably about 150 or something like that. But if you have a lot of foreign housing rental, foreign company, and foreign accounts, then it adds up if you have more forms used.
Absolutely. And I will welcome this person also to, at the very end, I will share the QR code of Mr. Lee's office, and you can scan the code to talk to their consultant as well. But meanwhile, if you wanted to, you want to get that contact right away, you can send our code and we can connect you with him as well. So how about this? We can do 3 more questions, and at the very end, I will go ahead to the slides and share the contact information with everybody so you can scan the code and hopefully connect with Mr. Lee. So moving on to the next question. So how much oh, sorry, we already said that. So F1 from 2021 to 2023, and now is the first year of OPT. I don't know about filing taxes before, so I didn't file tax return during the last 2 years. I didn't have any income other than checking account, welcome bonuses, and COVID health emergency stipend. Should I do a makeup fill-in?
Yeah, you could. You might get the stipend back, but you do have to file tax return to get that stipend. But in the F1 student, again, it goes to how many years that you have been an F1 student. If it's within 5 years, then you have no, you just 1040 NR. If it's more than 5 years, then the 6th year you count the number of days over 183 days, you can file a 1040 and get all that bonus and COVID health emergency stipend.
Absolutely. And in terms of the $5,000 tax exception you mentioned for students, does that count if the students get an W-2 or an 1099? If in that case, that 5,000 exception will count or no?
Yeah, it counts.
Okay, sounds good. Then, for example, if somebody work in school but didn't make income more than 5,000, so he or she shouldn't report it?
No, he will report it and get the tax treaty, show the number, and you're exempt from tax.
Oh, okay. So it's just that doesn't have to pay tax, but you still have to report it.
That's
Clear.
correct.
Thank you.
Right. You got to file a tax return to get that exemption.
Absolutely. And probably get some money back from that as well. So I initially lived in New York and then moved to Boston starting from August last year. If I file multi-state tax, do both state taxes cover the whole year or is it just a period of time?
Yeah, it's similar to the other one. It will be a part year return for both state returns. So New York and Boston. So it will have one federal return and two state return, one for New York, one for Boston, and they're both part year state returns.
Absolutely. And for our final question, sorry we didn't get to all of these questions. Our audience are very excited and ask a lot of questions. But hopefully we'll do this again to answer everybody's questions. But for our final ones, hi, Mr. Lee. I'm an F1 student under 5 year. Do I need to report my assets abroad? For example, money in a bank outside of the US, which assets are counted to be taxed and how to file them? Thank you.
If it's under 5 years, you don't have to report any foreign financial asset. If it's over 5 years, I can list the foreign financial asset you likely to have to report: your foreign bank account, your foreign financial service, your foreign insurance, your foreign trust, your foreign mutual funds, your foreign company shares, and also your foreign stock sales. And these are considered financial assets that you have to report.
Absolutely. And thanks everybody for joining us. And I do at the very end, I do want to show Mr. Lee's contact information and you can scan the WeChat to talk to him directly to see if there's any services he provide that might be helpful for you. But hopefully we're going to do this session again and we can answer more questions for everybody. And then I want to thank everybody for coming in today's webinar. We received a lot of exciting questions and hopefully we answered them for you. And thanks, Mr. Lee, for joining us to provide your expert insight as well as answering all the questions. Thank you.
Sure, well, you're welcome, and have a wonderful day.
Thank you. You too. And thanks everybody for coming in. Hopefully we'll see you soon. All right. Thanks everybody. Bye-bye. Bye-bye, Mr. Lee. Bye-bye, everyone.
Thank you.